You're listening to the Monday Market Highlights brought to you by Milford.
Good morning. It's Monday the 24th of April and I'm Kate from Milford. This week in economic news, US jobless claims were higher at 245,000, the highest jump since November 2021. The weaker data points to a possible recession starting in the next few months. US housing starts fell 0.8% in March, reversing the large gains experienced in February, with the declines driven by the multifamily sector, while single-family home starts were up 2.7% month-on-month. UK wages inflation unexpectedly spiked to 6.6%, adding to the inflation pressures. This comes on the back of recent inflation print of 10%. These data readings increase the likelihood of a rate hike from the Bank of England in May. Also out of the UK, the unemployment rate increased from 3.7% to 3.8%. In New Zealand, the inflation print was softer than expected, coming in at 6.7% versus 7.1% expected, and this is down from 7.2% previously. In Australia, the highly anticipated review of the RBA has been released, which offered 51 recommendations, which the government said they support all of them in principle. Overall, the recommendations were largely in line with expectations, with no changes to the RBA's 2 to 3% inflation target, but changes to the board and governance. The new board will comprise the RBA governor, the deputy governor, alongside 6 external members with expertise in macroeconomics, the financial system, labour markets, or the supply side of the economy. The new monetary board will meet 8 times per year versus the previous 11 times per year, followed by a press conference, which is more in line with global peers. The RBA will also have a dual mandate for price stability and full employment, both with equal weightings. At the margin, the changes are hawkish, and given the inflation outlook, we are likely to see higher rates in the future. In equity news, Tesla released its first quarter FY23 results last week, where they announced further cuts to their EV prices to bolster demand. The automotive gross margin, driven by price cuts, fell by more than the market expected, and management did not rule out further price adjustments. This shows the EV sector has elements of cyclical sensitivity despite being early in its penetration curve. Tesla's share price was down almost 10% on the back of this result. Star Entertainment Group downgraded its FY23 guidance, with EBITDA cut by about 15%. They also announced a reduction of 500 full-time employees and froze all non-EBA employee salaries. This comes as another setback to the business, which is already facing political scrutiny, regulatory headwinds, and fines from AUSTRAC. Several resources sector quarterlies were released this week. Most notably, Rio Tinto saw mixed results, with strength in iron ore, driven by record volumes, but softness across other commodities, such as copper. Lithium producer Allkem results were also mixed, with higher than expected production offset by lower shipments and lower realised pricing. Management decided not to sell into the current weak Chinese spot market, as they remain of the view the underlying market is solid. And Santos posted an inline production result and strong revenues, about 5% ahead of expectations, driven by strong LNG realised pricing. But moving forward, the market is focused on the PNG LNG sale, which is expected to finalise in the next few weeks. Turning to the week ahead, we can expect the Australian quarterly inflation print this week, a key data point the RBA is monitoring to inform its next cash rate decision. Inflation is forecast to be 6.9%, down from 7.8% previously. US data next week will include the durable goods order, which is forecast to be 0.8% month-on-month. US GDP growth rate, which is expected to be 2%, down from 2.6% last quarter. And finally, from the US core PCE price index, which is forecast to be 4.5% year-on-year, down slightly from 4.6%. And finally, the euro area GDP growth rate will be released. It is expected to be 1.4%, down from 1.8% previously. Thank you for listening, and we'll see you next week.